Joining us now is Joyce Chang of JPMorgan Global Research. Joyce, it's great to have you on the show. And the first place I do want to start with you is your outlook for 2024 after what has been a very mixed picture internationally for global markets.
Yeah, it's been a really tough year for emerging markets. We've seen record outflows out of the bond markets and even out of the equity markets. But I think there is value here. The growth story in emerging markets has held in pretty well. And with the stimulus that China has done, they're also going to exceed their growth target this year. So we do think that emerging markets, particularly on the local currency side, is looking more attractive right now after having a very challenging year. Now, some of that year was just the relative value with the developed markets was quite even. But if you look at the growth story in emerging markets going forward, we actually have more conviction that growth will hold in the emerging markets than in some of the developed markets as you look to how 2024 will play out.
So you would invest in China right now?
I'm not so sure that China is the one that I would invest in right now. I think there's a number of the emerging markets, middle income countries, particularly some of those that are benefiting from the supply chain relocation, like Mexico, some of the what we would call connector economies where supply chain relocation and foreign direct investment is going. Now, China's gotten pretty beaten up right now. That is one that actually could do more of a tactical pop right now. But I think over the longer term, some of the countries like Mexico, India are probably going to be in better stead.
Okay. And of course, those are two markets where we have seen some outperformance this year. How about Japan? Because that has captured the attention of global investors this year, in part because of what we've seen with BOJ and the speculation that we could see some monetary policy shifting as well. But in general, that equity market has truly powered higher. Can it continue?
I think it can continue. Japan is a structural story right now. Japan is exiting deflation. It's had the first income gains and real wage increases. We think the financials are probably going to outperform when we look at other markets like Europe and even in the U.S. And they have first started it in a very sequenced way with yield curve control and the removing a lot of the restrictions on that. And I think the exit from deflation and from negative interest rate policy will be one of the stories in 2024.
I feel like 2023, looking back on it, was a very macro year in terms of what investors were watching, what was moving the markets, what the conversations, market conversations were. Is that something that's going to persist next year?
Well, I think it's going to persist, but it is really like, is the easing cycle going to be as synchronized, and how much easing is in store, and when does it start? I think the market's getting a little ahead of itself. I mean, there's definitely some fear of missing out as we're closing into the year. But the growth story into this year still looks really quite strong. I think more of the questions will come up in the second half of the year. But one key thing to watch next year is the election calendar. Next year is a record year of elections, 77 elections, more than half of the world's population going to the polls, 60% of GDP. You start with Taiwan, you come to the U.S., in November. So I think that there are going to still be a lot of geopolitical risks to watch in 2024, in addition to where we are in the easing cycle and when exactly that starts.
Do you think investors are fully appreciating that geopolitical risk? I mean, there's the known risks out there, right? Like Israel, Hamas, Russia, Ukraine. You could even see the tensions between the U.S. and China, tensions around Taiwan. But there are these other hotspots that have been sort of simmering as well, whether it's China with the Philippines, whether it's Venezuela and Guyana, whether it's North Korea. Are there more risks attached to geopolitics than are being talked about or being priced into markets right now?
I think there are more risks than what's being priced in, but it's very hard to price in that risk because you really can't time it. Some of this is about longer-term policy direction. And I would not say that deglobalization is yet a driver in the market, but we've seen supply chain relocation. We're going to see, I think, still more restrictions that are on tech, advanced tech in particular. And I think the political regimes and what the mindset is on the geopolitical risk will have quite a lot to do with how flows are going to play out over the longer term. And we've seen some of this. And this is one reason why emerging markets have had a more volatile year over the last 12 months.